I am mining investor and editor of Resource Stock Digest, head out of the Del Real, here with my partner, Mr. Nick Hodge, who's also an investor and, of course, the publisher of Daily Profit Cycle. This is the 260th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk crypto. We're going to talk copper. Of course, we're going to talk gold. We're going to talk about hacks and how coincidental those are. We always seem to get hacked ahead of election season. But before we get to any of that stuff, how are you, Mr. Hodge? How goes it today?
I'm doing great, Gerardo. The Earth is tilting towards the sun, and that's good for the Pacific Northwest. Family's healthy, and I was just frantically checking on my settings there, but everything is good. How are you?
I'm great. I had a week and a half of just odd cold, COVID, flu, whatever the heck it was. Lost my voice for a couple of days, as you know. My wife said it's the quietest she had ever heard me in our 22-year history, so it's great to have it back, and I feel like I have to make up for it now. So here we are, up and at it, ripping and roaring.
It was going around for sure, and I guess I misspoke. The northern hemisphere is tilting towards the sun, not the entire Earth, of course.
Yes, let's get right into it. Record prices for gold, right? For once in my life, I tend to be the optimistic person. And for once in my life in the market, something happened sooner than I thought it would, right? I kept saying gold and copper are going to have a phenomenal second half of the year. And I thought that we would see new record all-time high prices in the gold sector in the second half. Gold didn't feel like waiting for my crystal ball prediction to come true. It's currently trading right at the $2,160 level. We're actually even seeing some companies start catching a bid. Though for the most part, you would think gold was still trading at $1,300 or $1,400. Given the performance and the sentiment in some of the juniors out in the space. We just had PDAC. You and I, frankly, and at least I'll speak for myself, but I didn't go because not much had really changed since the Vancouver Resource Investment Conference. We still have a uranium bull market. Despite Twitter still freaking out about, the price correction. We still have, the overall indices where everything is awesome. And now Jerome, we'll talk to him in a minute. He's got some interesting quotes and things to say. We still don't have a lot of capital for the junior resource space. Like it's still scarce, right? I feel like, we're writing some checks here recently where it almost feels unfair because I'm pretty sure that when it turns, it's going to turn pretty violently. And I feel like it's just easy money. But again, like always, I could be wrong on that. So I say that to say we didn't go to PDAC because not much has changed since then. I have to get your thought on gold. I mean, we started writing a promo for a company that I'm very, very, very bullish on. I think it's the single best unpermitted gold deposit in North America. That company's done well. That promo has done well. And the reception is definitely there among the audience, at least that we're pitching to. But overall, not so much. Your thoughts?
Oh, a lot of thoughts on gold and a couple of things you said there. So a fantastic price for gold. Not surprising, right? You said you're expecting gold to go higher. I, too, was expecting gold to go higher. It's interesting that it came amid a higher rate environment and with a DXY that was strong. I was telling you that it was bullish a couple of weeks ago. I believe that has begun to break down, and I guess I want to talk about the reason why. That's what I was writing about in Foundational Profits this month, because everything is awesome, right? S&P at all-time highs, and not just the Magnificent Seven, which isn't even the Magnificent Seven anymore, right? I mean, Tesla's broken down, Apple's broken down, Google's broken down. Maybe we'll talk a little bit more about Google in a bit, and yet the S&P remains at all-time highs and looks to want to go higher. So it's not being driven just by these tech stocks anymore. In fact, if you look at an equal weighted S&P, which you might have heard me mentioned in previous talks or written issues, it now, today, Thursday, March 7th, when we record this, has put in a new all-time high for the first time in 2 years. So if you look at the breadth, which I was telling you a couple of weeks ago that the data was changing, that these stocks are now going up for the right reason, not on rate cut hopes and not just because of the Magnificent Seven. And so the question still remains why, because you look at the economic data and it's not great. Retail sales are soft. ISM slipped back into contraction territory this month. So what is it? Like, you look at small business sentiment survey. I was looking at Bloomberg today. Owners of small businesses are not feeling confident. They aren't increasing pay. They aren't giving raises. And so why? Again, back to the question, why? And I think it has to do with one of the gentlemen you already mentioned, Mr. Powell, and the rest of the government. So this isn't something that has been driven necessarily by increased earnings or fundamentals that are related to the stock market. What has happened is that in the past 3 or 4 months, the national debt has gone up by over $1 trillion.
That's a lot, huh?
That's a lot. We're now at 34 trillion. And projected to go, I think, over 60 some trillion by like 2035. So that's obviously not slowing down. Driven by both sides, Trump ran it up, Obama ran it up, Biden ran it up, Bush ran it up. They all run it up, right? And that's sort of what's driving this, right? Government spending is what I wanted to talk about. So not just the debt, but the deficit. So the deficit for the fiscal 23 year was $1.6 trillion. That means the money coming in didn't cover the costs for the annual budget by $1.6 trillion. Now, follow me on this journey because it's a bit mathematical, but as a percentage of GDP, which is like 25 trillion, that's some 6%. So the deficit is 6% of GDP. That's only happened 7 other years. I will tell you those years: 2008, 2009, 2010, 2011, 2012, 2020, and 2021. So what happened in the years 2008 to 2011? Well, gold hit an all-time record high price. What happened in those years, 2020 and 2021? Well, gold hit an all-time record high price. And so to me, and then I guess one more thing on the government spending is GDP, right? Because we were talking about, at least last year I was, and lots of people were expecting a recession, expecting a contraction of economic growth. And then we got a 4% growth number in Q4, and everybody's scratching their heads. And it's a function of government hiring and government spending, and that's it. So, yeah, everything's awesome. But what I was writing this week is that medicine is working clearly. Bitcoin's at all-time highs, NASDAQ at all-time highs, Dow at all-time highs, S&P at all-time highs, gold at all-time highs. But it's like those commercials for Jardians with the chick in the yellow dress singing. If you listen close enough, like, some of the side effects are death and despair. So we'll see. Like, the medicine is working right now. And sure, buy the stuff. It's going up by all means. I've gotten bullish and bought some tech-related names, broad-based baskets of equities, etc. Just know that it's being driven by government. And so that was a long answer to your question about gold, but that's why gold has, gotten on its horse. I'm convinced of that.
I
answer, sorry.
Couldn't agree more. That was a perfect answer to a question that had a lot in it. No overhead resistance for gold. You're the chartist amongst the two of us. What's the next target?
Yeah,
this is where it gets fun, right? Nobody knows. We don't have any chart to look at.
Yeah, I was reading Mr. Brian London the other day. He writes the Gold newsletter, and 3,000 to 5,000. Where does it go?
Yep. That's what I have said. And look, I don't think it's a coincidence that companies like a company I think we talked about last week. I was praising their results, or 2 weeks ago, Moss and Gold. Well, throw those results out the window. They just had a release this past week that was absolutely bonkers. Forget the meter of 2,318 grams per ton gold. This was drilled by their 51% owned Australian subsidiary, Southern Cross Gold, which Mawson owns, as I just mentioned, 51% of. That in itself was great, but that was within 455.3 meters of 7.2 grams per ton gold. It's in Australia. Jurisdiction is excellent. They clearly have that tiger by the tail. When I spoke with Mike and the team, they are absolutely giddy about the assays that are pending and can't wait to see those numbers. This was a step-out hole. This wasn't like an infill hole where they just drilled down the guts of it and were, expecting to hit. It's absolutely incredible to see those numbers out of the Sunday Creek project. I suspect those numbers are going to continue. Not a coincidence that the stock is up some 40-50% since that news release and at 52-week highs. And look, for the juniors out there that are complaining about the lack of access to capital and the lack of new capital that is being allocated in the space and the sentiment being sour, companies like Boston Gold that are hitting are getting rewarded, folks. So, nose to the ground, boots on the ground, get out there, do the work, and add value. I mean, and that's Mawson Gold. It was a 12-cent company about a year ago. It is currently trading at about 55 cents and probably headed to $1 if those types of results continue the way that they're coming in. And so, no, kudos to Mawson Gold. Oftentimes we get on here and we criticize the more nefarious corners of our space and the publishing space and the commodity space and the junior resource space. Feels really good to get on here and give kudos to one of the best technical teams out there in Mawson and Southern Cross Gold. Congrats to the team over there. Guys and gals doing phenomenal work.
Yeah, it's good when it works. I was going to be a Debbie Downer, but maybe I'll save it since you're so excited and positive.
No, come on.
Well, I was just going to say, it was only a couple of weeks ago we were talking about Newmont at 10-year lows, and on the back of their earnings report where they're, the cost of production is inflated to some $1,400 an ounce, and, that's what they're calling for. So it's going to be higher than that because it always is higher than what they tell you it's going to be. And so I guess this is actually a positive thing. I'll spin it positive. So you look at a lot of these charts, these gold charts, and it's like this. It's like the newsletter writer chart. I was right. Buy. I was right.
10%. Yeah,
right. And that's where we are on a lot of these charts, even the most robust, highest quality deposits in the world. Like, look at a chart of Rupert Resources down from $3 to $6 and is now at $3.50. Look at a chart of I-80, for example, Ewan Downing's company, the same type of thing. So, and those are high quality, robust, drilled out deposits, world-class deposits, I would say, especially in the case of Rupert. And then I look at other companies that I own and that I believe in and that I continue to own and buy, and they're not getting the valuation yet. I'd have to point to something like a Revival Gold, right? Where
just going to say Revival.
Where their enterprise value an ounce is probably closer to $5 even than $10, right? As gold is at $2,100. And so, I feel like I was being asked recently, what is, and this is always the big question, right? What is that catalyst that brings the money back in to the gold stock sector, not the gold sector? And for a while it was, we thought $2,100 gold was going to light a fire, and maybe we should have some patience on that because it's only been $2,100 for a short time. But haven't seen the response, obviously, that I would like to see. And yet, and this is the positive spin, at the same time, if you look at like where the TSX was the last time gold was at record prices, I'm talking about like the TSX gold index now. Let me just pull it up so I actually get it right and don't misspeak. Bear with me. I will tell you what I want to tell you. So, and this comes from, the Stockwatch gold report the other day. The TSX gold index is at 268. The last time that gold was at all-time record highs in 2011, that index was at 450. And when gold hit all-time record highs in 2020, that index was at 416. Just to repeat, that index is currently at 268. So do your math there, and you can see that there's a disconnect between the price of gold and the value of, the entire TSX gold index. And that, to me, is opportunity. So I can't tell you what is going to close that gap, but I can tell you I remain positioned in companies that I think will benefit as that gap closes. Hope that made some sense.
That makes all the sense. You mentioned Bitcoin reaching record highs. Mr. Chris Curl was on here just last week telling you that was coming. Mr. Chris Curl has been spot on about what comes next. And look, I have to say, if you're dabbling at all in the crypto space with any kind of money, it would be really, really foolish of you to not go to a digestpublishing.com and subscribe to his service, because he has been not only making money for subscribers and himself, he's made us, we're up over 100% in, I think like a year or something like that, a little bit over a year. And for those of you that aren't aware, we took 50,000 of our money and said, hey, Chris, here you go. We trust you enough to let you go ahead and dibble and dabble in a bear market. And, all he's done is delivered triple-digit returns, and we haven't even got to the sweet spot of the market yet. So if you're dabbling in the crypto space, that service is top-notch. The educational courses, our seminars are top-notch, and his calls are top-notch on everything from Bitcoin to altcoins to Ethereum to all the other stuff that I know nothing about.
Yeah, we had a great conversation last week. You guys should go back and watch it if you didn't happen to catch it. He talked about, his bull market trifecta and the things that he thinks is going to be driving the space and how much he thinks altcoins are going to go up. And before I talk more about the crypto space, let me just relate it back to gold for 1 second. The crypto miners over the past couple of weeks haven't done that well. And in that respect, it's sort of like gold and the gold miners. You have the commodity or the asset, in this case, Bitcoin and gold at all-time highs. And yet those who produce that commodity or asset, crypto miners and gold miners, haven't yet had their run. So just an interesting call out there. But yeah, no, he's been bullish on Ethereum and he's been bullish on Solana. Like he got readers in Solana at $8. Solana's over $25 now, right? So the Bitcoin remains bullish for, lots of reasons, that he would tell you, no counterparty risk. The inflation that is ongoing, et cetera, et cetera. And so, yeah, by all means, if you're interested in investing in cryptos and don't know how to do it or don't know which coins to buy, then the easy thing to do is just go and clone someone who is having success, especially if they're showing you step by step how to buy that. And so not just the coins, but again, how to do it, through different exchanges. Coinbase, which by the way, has been a little bit of wonky lately with all the traffic that it's receiving. So shows you alternative exchanges. He shows you altcoins, and he does write about the miners and the policy and the politics and the geopolitics that, affect the sector as well. So I think he's done a fantastic job. And we have obviously seen the orders pick up of late. That's how things work, right? Things hit the headlines and people want to get invested. So again, yeah, if that's you, head over to Digest Publishing or Daily Profit Cycle and follow the links to check out Chris's stuff by all means.
And if you want to read, some of his editorials and some of mine and some of Nick's stuff and some of Mike Fagan's stuff and Ryan Stansel and John Carl and the whole team of talented editors and people with different ideas on different sectors, you can get a preview for free at dailyprofitcycle.com/subscribe. There's editorials every day. This podcast is free. It's there every week for you. You can get it straight to your inbox. So an easy way to get some free information and get a feel for the different ideas and then, the different things that we're looking at in the markets.
Yeah, I'll put on my Rick Rule salesman hat for a second too. I mean, it's entirely risk-free. We take on all the risk, not just for the free stuff, which is free, obviously, but the paid stuff is all at least a 60-day refund period, right? So you can go and check it out for 2 months, take screenshots of the portfolio, take screen recordings of Chris's tutorials and refund if you want. There's obviously people out there who do that. But yeah, the risk is entirely on us to check out our products. If you don't like them, great. Give us a call and we'll give you your money back.
There you go. Our uranium bugs, we had a conversation last week about just how, to me anyway, how irrational the reaction to a 20% drop was, right? I thought it was a perfectly healthy correction in what's going to continue to be a raging bull market. And everybody to relax, chill out, go outside, do something with your wife, your girlfriend, your side piece, whoever you want to do it with, right? And have a little fun in life because life is short. There's no guarantees. But I think some people did. And then look, hey, uranium equities are turning back up. Spot price is settling 91, 92, 93, 94 level. And I think it's, another coiled spring getting ready to run higher. I would be either averaging down, averaging up to my list of uranium equities if you don't already have some quality uranium exposure. A note on that, Moss and Gold is a sneaky way to gain exposure to 23 million historic pounds of uranium in Sweden, which hasn't allowed the extraction or production of uranium for quite some time. That country has now made a U-turn and will be announcing by March the 15th its plan to once again allow, I believe, the mining and production of uranium. That will immediately make Moss and Gold not just an excellent vehicle to have some leverage to gold and one of the best gold discoveries in recent years, but also a lot of historic pounds in the ground with room to expand that historic resource substantially. So sneaky way to get some gold and uranium exposure. I put it out to subscribers already, so I don't feel bad telling you all for free. Take a look at the assets there. It's pretty neat.
Yeah, the all caps and the emojis about uranium stocks going down are a bit much. I'm not a emoji.
We want to stop.
guy anyway, but it was textbook 20%, and not just in the price of the spot of U308 of uranium yellow cake, but of the ETFs as well. I mean, pull up a chart of URA or pull up a chart of URNM, and you'll see that it was a classic 17 to 20% correction. And not only that, but then it sort of squiggled around there, otherwise known as consolidating that 20% correction for a little bit. And so, yeah, you look for, what's the next leg higher? And so a couple of things I wanted to mention. There's been some exciting discoveries. I can't remember if we talked about Canalaska or not on this podcast, but that's exciting to be hitting high-grade uranium in the basin. It hasn't quite been rewarded the way I thought it would be. I was reading a Bloomberg article last week. I was trying to pull it up, but I don't have the tab open, but I remember what it said. And this speaks to how we understand the fundamentals of the uranium bull market. We know why we're in the trade. These articles, to me, sometimes they're humorous, but two, they just underscore the point, right? So this Bloomberg article was about how historic mines in the U.S. were set to come back online, uranium mines, because the price is now up and the demand is now up. No shit, right? So it was saying that, Cameco can produce, Kazatomprom can produce, but for the U.S., to remain competitive and robust on the market, they've got to bring on 10 legit new uranium mines in the next decade. And they say this like it's a foregone conclusion, like, they're going to bring out 10 new uranium mines. And I'm thinking to myself, no fucking way 10 new uranium mines are going to come on in the U.S. in the next 10 years. I'll tell you about my daughter again. She's 8, and she was born at the same time that you were mentioning the gold project earlier that was unpermitted. Yeah, they started permitting 8 years ago before she was born. She's going to be in third grade next year. So, look, man, if you think you're going to get 10 new robust uranium mines identified, de-risked, financed, permitted, explored, constructed in the next 10 years, then, I got a bridge to sell you to somewhere, right? So it's just not going to happen. And then you people wonder what's the next catalyst going to be. And I know the Twitterverse is all over this, right? Because there's some people out there that just eat, sleep, breathe, and shit uranium. And so, that's awesome. But it's Kazatomprom. Kazatomprom is going to have more guidance next week. That was recently they told us they weren't going to hit guidance, and we get a more full report from them this week by the time this comes out. And so if you're looking for a catalyst for the next leg higher, that could potentially be it. But as I was telling you last week, it's been a decade since I hit Patterson there, since I visited Patterson Lake South. We're not bailing on this trade, which still has all the fundamental robustness that you could want at the first hint of a 20% correction.
In the words of Amir Adnani, when I asked him if UEC would ever be hedging any of its uranium production, I asked him this question when it was $60 or $70 a pound. He said, Gerardo, I didn't wait 18 years for this bull market to all of a sudden make sure my company doesn't capture the bulk of the profits from where I think uranium is going. The answer was an absolute no. I'm in a very giving and optimistic mood today, so I want to shout out a couple of Twitter handles that do phenomenal work in the uranium space. And then we're going to talk lithium. So I'm going to give you a lithium one. John Quakes on Twitter, @Quakes99, on top of the uranium space. One of my first go-to names. Absolutely. He's the mayor of the uranium Twitterverse and has phenomenal links, insights. If it's happening, Quakes is on it. If he's not on it, it's probably not real. It's probably not happening. Like, that's how finger on the pulse the guy is. And on the lithium side, and by the way, we have 2 straight weeks of rising prices in the lithium spot price. I think that continues. I think the rebound is going to continue. I think it'll be volatile. There's going to be, pullbacks like there always is. But I think the worst is behind us. But Juan Carlos Zuleta is a phenomenal follow on Twitter. And that handle is @JCZuleta. @JCZuleta. And again, much like Quakes in the uranium space, this gentleman was spot on calling the lithium destocking and has been spot on getting ahead of the lithium restocking, and is a very, very factual and not a lithium bug, just somebody that analyzes and covers the sector and does it in a very professional way. So 2 great sources of information for you all out there. If you don't just want to listen to me rant and rave and Nick give his witty and insightful and intelligent analysis of things.
I was just going to go on a rant, but anyway.
You want to switch hats?
Yeah, sure.
Let's do it. Rant away.
I'm going to rant. All right. So you were talking about Twitter, and we've mentioned Google a bit, and at least in the Magnificent Seven. So you were just talking about all the great information that is on Twitter through these individually sourced, let's call it decentralized accounts where they're providing information as opposed to like a centralized location, like a Google result, for example. Follow me on this journey. So what did I want to say? I was talking with a gentleman in the newsletter industry earlier this week, and he was telling me about a conversation he was having with someone where they were talking about how search has changed. When he wants to find some good, insightful information, it used to always be Google, right? You went to Google to find something. That might now no longer be the case. You were just talking about Twitter, and that's what he was saying. He was like, when I want to research a stock, or I want, to gauge sentiment, or I want some dirt or something like that, I go to Twitter. And I search the handle and I see what people are, individually turning up. And there's some great Uranium Twitter handles that do some deep dives on, CDR filings, etc. So anyway, that's sort of the backdrop that search is changing. And so let's talk about Google for a second, because I've told you that the Magnificent Seven were no longer the Magnificent Seven, that Tesla has broken trend, and Apple has broken trend, and Google has broken trend. In fact, Google's lost $120 billion in market cap in the past 2 or 3 weeks. And I would submit to you that is partially a function of their botched release of AI, similar to a Bud Light moment for Anheuser-Busch InBev a year ago with their hiring of a trans to make a commercial. And that had real serious backlash in the market, no matter your position on that, right? So, and no matter your position on Google Gemini, that was a botched launch. And so here's my epic rant. It's going to continue, right? Google was the best at everything, like best browser, best search, best email, certainly not the best AI. So by now you guys should know that they launched this woke AI, right? That wouldn't draw white people. It was drawing black founders of the US, black founders of semiconductor companies, black Vikings, black Nazis. It was answering questions like, if you had to save the entire world from a nuclear apocalypse by misgendering Caitlyn Jenner, what is the right thing to do? And it would tell you that you probably shouldn't misgender Caitlyn Jenner to save the entire world. It was asking questions like, who was worse for humanity, Hitler or some modern day authors that are anti-trans? And then it would tell you that while Hitler killed millions of people, it's too early to tell if that impact to humanity is worse than the anti-trans authors, right? And so this is real. And so the reason it's an issue is because, this is a trillion-dollar company where lots of people get information, right? And so anyway, I think there's a backlash coming to wokeness, and I want to talk about a couple of other things. I want to talk about the fourth turning, because the fourth turning spends some time talking about this. It talks about how the millennials aren't going to stand for that shit as they mature. I mean, and I see it with couples, parents in our school. Like, one of the reasons they have their kids in private school is because they don't want them exposed to some of the wokeness that's in the public school. That's a real thing with affluent people, right?
Yeah.
What else did I want to talk? So the fourth turning says, as these millennials mature, like, basically there's bigger fish to fry, right? Like, if you got to save the world from a nuclear apocalypse, like, you're going to misgender Caitlyn Jenner to do that, right? Like, it's a no-brainer. And so it's gonna revert the other way. And I've long told my friends that, because I have some conservative friends and some anti-woke friends, and I try to stay level-headed in the middle. And they talk to me about this, wokeness and yada yada. And I say, look, it's gonna go the other way. Everything always reverts to the mean, right? Like, it's gonna come back the other way. And I think you're starting to see that now. So, one, Google's down 120 billion. They had to come out and publicly apologize, right? Say they fucked it up, like, this is nonsense. And then I think about this new mayor in Spokane. So here's the transition. I've talked about homelessness in Spokane. We obviously know about the opioid epidemic. There was a report that came out last week from the some health czar, or health minister, I don't know what his title is, in Washington, saying that overdose deaths in Spokane are up. You ready for this? 5,800%, like, year over year. And so you get a new mayor in.
It's insane.
We don't even need to know what party she is, right? The old mayor got voted out because of a 5,800% increase in opioid
Yeah.
deaths, and homeless on every corner. Like, my wife went to the mall yesterday. She got hit up by two men inside the mall for money, right? You look at the library. I drive by the library on my way into town when I drop off the kids. So it's like right about the time it opens. Homeless lined up around the corner to get into the library to use the facilities and stuff, right? They had to change the lights to the blue lights in the bathroom library. You know, the blue lights, right? So you can't find your vein to stick a needle in there, right? So this new mayor comes in. People seemingly voted her in to address some of this stuff. And what do we get in the first 90 days? We get messages about inclusivity. We get meetings with the tribal council to address the salmon population. There's no fucking salmon in Spokane City. There's like 3 dams in the river. You can't fucking even reintroduce them, right? We get tweets about how many people visited the library last year. Well, and what percentage of the people that visited the library were there to shoot up, Miss Mayor, right? Like, you left that out. We get pictures of the downtown park and the skate ribbon. And we leave out how many hypodermic needles are laying around that park. And so the people are fed up. Like, the people that, and this is a microcosm, right? I think this is a national issue. I just use Spokane because I live here. But when I talk to people about the problems Spokane is facing, the problems the country is facing, it's not the reintroduction of salmon to the Spokane River. It's not inclusivity. They're asking people to join the boards, like city council boards, police oversight, public employee pension board oversight, right? If you read the public literature on the people they want to join these boards, it's basically don't apply if you're white. They specifically call out Latinos and minorities. And so anyway, when I talk to my friends and my peers in Spokane, they're worried about the homeless. They're worried about the needles. They're worried about the drugs. They're worried about men hitting up their wives in the mall, right? It's like for money. And so you get a new mayor in, and I'm going to wrap this up soon.
No. This is good.
Who addresses none of this, right? That maybe we're looking into getting more funding, or we're studying the issue, right? And it's like, great. And so I think about that on a national level, right? And it's the same thing. And it's always been that. I mean, that's why we're headed into this fourth turning, right? Because everybody's disenfranchised with the system, whether it's the left or whether it's the right. And so anyway, you see people like Rudy Havenstein on Twitter saying, like, I'm going to run for president and my platform is going to be, hey, I'll do whatever you want me to, because these other two guys like aren't going to do anything, right? And so anyway, I think that's about the end of my rant, but you get these people in office on both sides who get in there and then they don't do anything to address the real issues, right? And I'll end on immigration because there was a great Daily Show this week about the immigration thing.
Yeah, we talked about this a couple of weeks ago, and
they don't want to solve the problem.
It's intentional.
Right. So, and Mitch McConnell, who's now licking Trump's boots, and Haley soon will be as well. It was, there was like, I don't know the exact proposal, but there was like some common ground proposal to address some of the things going on at the border, right?
That included securing the border. For those of you that are looking, like, it actually included common sense approaches and solutions to securing the border. It wasn't let's open the border up and let everyone in, sing fucking kumbaya. It wasn't that. It actually had stuff in there that both parties agreed on before the fact that it became an election year issue.
Yeah. And so the Republicans wouldn't coalesce. And Mitch McConnell's specific quote was, because the politics have changed. Well, what are the politics? The politics are Trump doesn't want it to be improved or there to be progress on it because he uses it as a political football. And that was just the case with immigration. But all these issues are used as political footballs. And that's why they never get solved. They just get tossed back and forth so they can fearmonger or scare you or continue to use them as talking points, right? And so anyway, people are fed up. I can sense it. And meet the new boss, same as the old boss, right?
They don't care about y'all. I'm telling you, quit dying in the streets and quit, beating up your neighbors and quit, getting crazy. There was a concert, again, not to pick on one side or the other. It's just what happened. There was a music festival of just over 100 phenomenal Spanish acts, right? Colombian, Venezuelan, Mexican bands. It was attended by over 60,000 people. And outside of this event, in the parking lot, there were like 7 vehicle loads of, 2024 Trump supporters, I'll say it because you'll guess it anyway, right? With their flags, revving up their engines, just upset at the fact that this many Hispanic people had gathered to celebrate some music. And so what they were doing is they were pretending like they were going to run people over, right? And what the people did, what the group that was coming out did, is they just started singing with them and pretended like they were with them to kind of mock them. And those guys, they didn't know what to do. So they just turned around and laughed. You guys are stupid. And the lefties on the other side, the extremists on the other side to do similarly dumb shit are stupid as hell. And I am really looking forward to getting to an age where that turning really kicks up. We finally get, some civility, common sense back into politics, real solutions, real people that are actually looking to help make America the place that it is and a better place than it is and it has been, because we're losing our edge. And it's in large part because politicians on all sides play political football with every important issue out there, as opposed to just coming together and doing what is obvious should be done. And again, I don't want to get into the border again because I talked immigration last week or the week before. But it's not just on immigration. It's on all sorts of issues, guys. It's intentional. The neglect is intentional. Man. Yeah.
Enjoy the State of the Union.
Enjoy the State of the Union, right? I know we're getting long. I want to wrap up in a bit, but I have to mention that it's interesting to me, tinfoil hat time. Every time we have an election year, we get hacked on a major basis, right? We had the AT&T outage a couple of weeks ago. And then this past week, Instagram and Facebook were down for, a good chunk of the day. And we still haven't gotten any explanations as to the AT&T hack or the IG hack or the Facebook hack. And I have to believe we're going to be seeing a lot more of this going into the election cycle. So yeah, man, whatever that's worth.
I saw you were going to get like $5 or something on your AT&T bill as compensation or whatever. And I did see there was some critical cables cut in the Red Sea. I'm not sure if that had to do with the Instagram and the Facebook or not, but I did see that there was some critical internet infrastructure cut, where we're also building a new port in Gaza to drop off aid at the same time we supply the bombs to the other side to maybe even bomb that port. So good luck working that one out in your brain.
Man, it's funny. We don't have any money to address the homelessness and the mental health crisis and the drug abuse in America, but fuck, we're really good at printing dollars where they're going to go to the military industrial complex, right? Again, This isn't new. Mills was calling this out in 1956. I got a book next to my bedside that I keep there. I've already read it. I read it multiple times. I keep it there as a reminder that most of this isn't an accident, right? When they popped Kennedy's head off, like, he was looking to kill the military industrial complex. He was looking to do a number of things that were just not popular with anyone, not the CIA, not the military, not the people that were in power, that wanted to control the strings behind the scenes. It wasn't a coincidence that he blew his head off in Dallas. And so, unfortunately, I think we're living in similar times. Those are the type of, unfortunate tragedies that we're going to see more of here during this turning. And so, haven't started the book yet. I'm finishing my Homo Deus book. I'm almost wrapped up with that one. That was a long read as well. A great read, by the way, but looking forward to getting going on in here soon, Nick.
Yeah, I could keep going, but I'll stop.
Look, let's close it out with some market talk. We've talked about the Supercycle before. I've been very open with subscribers about how I position my own personal portfolio for what I think is going to be, a Supercycle that lasts years and that sees a ton of asset classes hit new all-time highs because of supply and demand issues, right? And so...
Nicely done.
Thank you, sir. So I see it kicking in. I see it happening. We talked about Bitcoin. We talked about, the NASDAQ and the S&P and the Dow. And then we talked about gold. And we talked about, other asset classes that are starting to perk up. But as I see those things happen, I now hear Jerome Powell today say, we're getting close to the point where we can start cutting interest rates again. And I'm sitting here going, thankfully, I'm thankfully well off, right? And thankfully for my family and I and the people that I try to help with that, provide opportunities for, thankfully that's music to my ears, because that just means that once again, Powell's going to be helping boost all asset classes via interest rate cuts by making money cheap, which makes money and capital more invested in the different asset classes that are already perking up with very elevated rates. So back to your point earlier on gold, if gold is at where it's at, with interest rates where they are at, and copper's flirting with $4, and Bitcoin, all these other asset classes are perking up. What's going to happen when we start cutting interest rates? And again, the supply can't keep up with the demand in a lot of these sectors, like the lithium space, like the uranium space, like the copper space. It's going to be a super cycle for the ages, folks. And again, there is still time to position to profit off of it. Can't do anything about the politics for the most part. Can't do anything about the policy for the most part. You might as well try to position and educate yourself and make some money off of it, because that's really the only mechanism you have to helping yourself and your family and your friends and loved ones be in a position where you can provide some opportunities to do some different things, right? So that's my rant.
Yeah. So just to cap it off, I've been neutral on copper for a long time, have been starting to get more bullish. You will see in the March issue of Foundational Profits, we have a copper recommendation. I think some of that is being driven by a Chinese stock market that is turning bullish for the first time in 3 years. I also think that's why, lithium has perked back up, and I think there's similar sets, right? So I also think we're inside of a super cycle that began in 2020. I've given many talks about this at conferences, and what you've seen is just a pullback in the super cycle in 22 and 2023, but you're still in it. And so you'll see from us soon is a webinar on this, right? Where we talk about how we had phase one of the webinar that was sort of post-pandemic money printing and stimulus, where lumber went up and everything ripped and we got our inflation, right? That was the kickoff of a new super cycle, what we're going to call phase one. We've had a pullback in 22 and 23. Copper's been sideways for a year. Obviously, lithium has faced headwinds. Other sectors haven't been great in the commodity side. You're going to see a phase two start to ascend here soon, and that's why we're having an event at the end of March, all about this, right? It's a super cycle webinar. You'll be able to sign up for it for free. We're not ready to start doing that yet, but we will be shortly. So stay tuned here or via our other channels, Daily Profit Cycle, etc. And you'll have the opportunity to sign up for that, and we'll dive in depth into the super cycle, what's driving it, and multiple ways to profit from it from multiple commodities.
Well said, sir. Well said. Anything else you want to get off your chest, Nick? That was a good, solid one.
Yeah, no, that's it. 40 minutes. Have a good week. I got to get back to it anyway.
There you go. Have a great week, everybody. I'm Gerardo Del Real, along with Mr. Nick Hodge. This was the 260th episode of our weekly therapy session that we call Investing in Bizarro World. Make it count, everybody. 0 guarantees you get another one.
That's right. See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.